This analysis report details DataVault AI's significant 55% price surge, driven by a special warrant dividend with a $5 strike price and a huge presentation at CES 2026.
Yeah, this is a fascinating one. It's very high urgency, and the material does a great job of grabbing your attention right away.
It really does. It frames this convergence of the dividend date and CES as this definitive moment.
Absolutely. A call to action.
So let's start right there, with the biggest pillar of this whole thing, that $5 warrant strike price.
To elevate the analytical rigor, the report should introduce alternative interpretations of the $5 warrant strike price, rather than presenting it solely as a management guarantee of 400% implied upside.
Okay, so the argument running through the report is strong. I mean, it basically says this $5 price is the signal you can't ignore. Management is essentially validating that price. And, for a quick, compelling story, that works. But is it maybe too simple for a really robust analysis?
That is the core weakness. It makes a powerful case for management's confidence, no doubt. But framing it as this simple validation, it risks oversimplifying some pretty complex corporate finance mechanics.
But wait a minute. If the goal here is to mobilize investors around a short-term catalyst, doesn't keeping it simple, hey, management thinks it's going to $5, doesn't that actually work? Why dilute that urgency?
Offensive reasons for setting a high strike price.
Okay.
And this audience, they're sophisticated. They might see that omission as a bit of a red flag.
So you're saying by acknowledging the complexity, the bullish conclusion actually becomes more compelling. It's like you're showing you've done all the homework.
Exactly. We need to strengthen the logical robustness. We can do that by just acknowledging that the warrant strike price could serve other purposes, like limiting near-term dilution.
That's a huge point. Warrants are often set way out of the money on purpose, right?
Right, to prevent the existing shareholder float from getting watered down immediately.
So that shifts the focus from just a motivational signal to a strategic corporate move. It forces the reader to consider both the upside and the risk management.
And a more balanced view just lends so much more credibility to the whole thesis. It shows the analysis has considered everything, investor psychology and treasury management.
Okay, so let's get specific. How would we implement this when talking about the dividend, the one warrant for every 60 shares?
Well, first, when you introduce that detail, you could shift the phrasing from target to something like potential threshold or even long-term hurdle.
Ah, okay.
That immediately signals it's conditional. Then, right after saying management seems to believe the stock is worth $5, the analysis should pose a counter question.
Like what?
Something like, I wonder though, is there a strategic element here to ensure the warrants only convert far down the line, protecting the existing float?
I really like that. That kind of nuance instantly elevates the whole report. It also makes the bear case section much stronger, doesn't it?
Absolutely. You can show how this alternative view actually strengthens the bear case analysis. If the stock never hits $5, the warrants just expire worthless.
And dilution is completely avoided.
Which is a huge positive for current shareholders, a point that gets lost in these high-urgency reports that are only obsessed with the upside.
So by presenting that strategic nuance, the original bullish conclusion that $5 is possible, it actually carries more weight because you've acknowledged the complexity.
Exactly.
That calibration really tightens up the financial argument. Okay, let's pivot. Let's go to the second major area, which is all about how that excitement and urgency is communicated.
Right.
The analysis uses a lot of high-tension, almost sensationalist language. I'm seeing monster move, bombshell announcement, perfect storm.
And that's a critical observation. The highly urgent and hyperbolic language used to drive immediate action may inadvertently undermine the credibility of the impressive technical analysis in the middle of the report.
Okay, but here's the friction point for me. If the analysis is all about a short-term squeeze tied to a specific date, January 7th, doesn't that high-tension language actually do its job? Why would we want to dilute that urgency?
The weakness is that while it achieves that short-term excitement, for speculative trading, it can diminish the data that comes next. When we use words like monster and bombshell, the really crucial objective figures like the 300 million volume day, the break of the $1 resistance, they somehow feel less authoritative.
It starts to read more like a promotion than an objective analysis.
Exactly, even if the underlying technicals are perfectly sound.
So the suggestion isn't to remove the excitement, it's to transfer the excitement from the adjectives to the data itself.
You've got it. The recommendation is to calibrate the tone, especially in the hook and the final verdict. Let the impressive figures, the 55% gain, that massive volume, the $1 compliance break, let them speak for themselves.
Right. Let the technicals carry the weight. That builds more long-term confidence. So what are some specific ways to do that in the opening hook?
Well, in the opening, it uses phrases like stop what you are doing and massive run. That can feel a little frantic. I'd suggest replacing those with something more neutral but still compelling.
For example?
Something like examine the potential inflection point for DVLT, or a significant technical breakout in the AI sector demands immediate tracking. It still conveys importance, but without the sensationalism that can erode trust.
I like that. It shifts the focus from, panic buying to critical, timely examination. That fits better with the deep technical analysis later on.
And you see this urgency in the middle section too, the perfect storm part. Instead of saying, the timing here is absolutely critical, frame it differently.
How so?
You could call the relationship between the record date and CSCS a rare convergence of short-term catalysts that demands immediate tracking.
Ah, so the importance comes from the rarity of the event, not just from a sense of frantic urgency.
Exactly. It's about strategic planning, not an emotional response. And it lets us focus on what's really important, which is that $1 level.
Which is huge here.
It is. Breaking and holding $1 isn't just a price move. It's a massive psychological threshold for institutions, for compliance, for algorithms. That technical achievement should be the source of the excitement, not hyperbolic adjectives.
And I'm guessing this applies to the conclusion, too, the final verdict.
Precisely. To maximize credibility, the conclusion shouldn't be a definitive verdict, but should focus on the conditional success of the setup.
So instead of saying it looks primed for a run, what would you say?
You emphasize the technical discipline. Something like, if we hold $1 on strong volume, the path to the warrant threshold is statistically clarified. It showcases discipline over prediction, which is what separates a real thesis from just a sales pitch.
Okay, focusing on that conditional analysis makes perfect sense for a speculative play like this. Now, let's talk about context. The report is so heavily focused on catalysts.
Right. Warrants, dates, charts.
It's almost entirely a momentum and timing play.
And that brings us right to the third major opportunity. The analysis relies almost exclusively on short-term catalysts and could be significantly strengthened by integrating specific fundamental context regarding DataVault AI's core business model.
Right. I mean, the report mentions DVLT focuses on data monetization tech, but that's it. There's no detail. We don't know the product, the market, anything to justify the momentum.
And that's the core weakness. Without that fundamental context, the $1 breakout and the huge volume, they feel disconnected from any real long-term value.
So, the bull case is kind of floating on air.
Exactly. If the news from CES is just okay, or even disappoints, the reader has nothing else to anchor the thesis on. The stock is likely to crash much harder.
So, the suggestion is to integrate a brief but high-impact description of the company's tech before you even start talking about the short-term catalysts.
Yes, it provides that necessary grounding. It strengthens the whole significance and relevance of the report. It answers the so what question beyond just a chart pattern.
You need to know why DataVault AI specifically is having this moment. CES is a huge stage, sure, but what are they presenting that actually matters?
Without at least a sentence of background, this analysis risks looking like a report on a ticker symbol being pumped, not a genuine play based on tech merit and good timing.
That's a powerful point about resilience. If it's only built on timing, the whole thesis just collapses if the timing is a little off. You need some fundamental protection.
You absolutely do, and it doesn't have to be a deep dive, just economical, impactful language to give that context.
So what are some concrete ways to weave this in without, killing the momentum of the catalyst discussion?
Okay, in the section just before the CES discussion, you add one sentence, just one, defining their data monetization tech. For instance, you could say something like, DVLT is known for its proprietary platform that lets financial clients monetize high-frequency trading data.
An area experiencing 30% year-over-year growth. Something like that.
Perfect. That one sentence instantly anchors the company in a high-value, relevant sector that justifies all the interest.
It gives the technical breakout real meaning. It tells the reader the underlying business is solid enough to justify paying attention.
And then you refine the bull case. You add a non-catalyst element to it. Instead of it being all about the $5 target and CES, you add some structural depth.
So you might say something like,
You could say the underlying technological advantage in secure data exchange remains robust, providing a foundational safety net if CES news is merely good, not explosive.
I see. So the risk-to-reward ratio suddenly seems less reliant on just one or two short-term events. It demonstrates fundamental resilience.
Exactly. Integrating those concepts without turning this into a deep dive on their Q3 earnings. That's the ideal balance. The integrity of the piece just goes way up with that brief, targeted context.
This has been a very